All right, in the meantime, the bulls are back in town. More than half of traders are feeling bullish about the U.S. stock market, according to a new survey from Charles Schwab. That's the highest reading of bullish sentiment since 2021 and a significant uptick from the quarter prior. With more on Schwab's trader sentiment survey, we're joined by James Kostulias, Charles Schwab, head of trading services. Thanks for being here. So this is a pretty big reading here. What is this kind of bullishness driven by? Does it tend to be pretty correlated with what the market is doing? Is that what's going on?
Hey, Julie, thanks so much for having me. Yeah, great question. So obviously the sentiment will be driven a lot by the macroeconomics of the environment. But what we also see, we do some behavioral work too with what we call the Schwab Trading Activity Index, where we monitor not only the sentiment here in the survey, but the actual actions, the buying and selling that clients are doing. And we see a strong correlation between the two in the most recent Schwab Trading Activity Index. And so I think it's a combination of the macroeconomics and the overall economy and feeling a little bit better there. And you'll also see in the numbers, trader confidence has risen a lot as well, up to almost 70%, up 20% from the last quarter. And I think that confidence does get driven by the macroeconomic factors, but it's also driven by the fact that we're finding traders being more and more analytical, more and more research-based, leveraging the tools, leveraging platforms, leveraging education and content like your show in order to make those decisions. And all those are hallmarks of the Schwab Trading powered by Ameritrade value proposition. And so I think it's a combination of the macroeconomic and actually what traders are actually doing.
And James, so bottom line, people are feeling, it sounds like more confident when they look, for the year ahead here, James, though, and you ask them, listen, what are the concerns? What do they tell you is on sort of their wall of worry here? Is it inflation, election, geopolitics?
Yeah, it's a great question, Josh. I would break it into two categories. From a worry perspective, geopolitics and the macroeconomic conditions sit at the top of the list. But then we also ask them, what else are they most believing will affect the economy? And that's sort of a combination of probability and materiality. And so we see geopolitics sort of blend into both. But when they're actually thinking is going to have the biggest effect on the economy, they swing a little bit away from the macroeconomics and more towards the election and interest rates and what they think the Fed's going to do.
And so what are they doing with their money as a result of all this? Because I know you guys did some survey work on that front as well.
Yeah, and actually the work on what they're doing with their money is less survey driven, Julia, and it's more actual looking at data. So it's not attitudinal, but it's actually behavioral. And so what are clients net buyers of and net sellers of? And we do see strong correlations right now with what they're saying in the survey. So they're bullish on IT, they're bullish on healthcare. I just saw the section you just did on NVIDIA, right? It seems like everybody's bullish on NVIDIA these days, but we do see net buying in NVIDIA, we see net buying in Microsoft and Amazon as some of the bigger tech names. And then we see a bearishness in the financial sector, and we sort of see that reflected in net selling of Bank of America. So we see both attitudinal and behavioral convergence here, which is interesting. Sometimes you see what the sentiment is and what client behaviors are actually diverge a little bit, and that tells us something different. But strong correlation right now to what clients are saying in the sentiment survey and what they're actually doing.
All right, Schwab clients bullish on NVIDIA along with, it seems like everybody else, James. Thank you for joining us so much today. We appreciate it.
My pleasure. Thanks so much for having me.